What's up, y'all? Let's talk about the market and what are mortgage-backed securities, right? So those are basically what really drives interest rates, not just the Federal Reserve dropping it down, which is a big misconception for a lot of borrowers out there, right? They're thinking it's down to zero. They're like, aren't rates almost down to zero? I've heard that a lot, but no, it's not true. Mortgage-backed securities are traded publicly where people can buy and sell those. So what the government has been doing is buying those, and they're spending $80 million a month on doing so. Well, the good times don't keep rolling. The money does eventually end, and the money tree is usually lost every leaf. Well, we're getting to that point where the money tree is about shaking loose. There's no dollars that they're going to keep being able to invest in this. They will be able to create some money and do it again. Trust me, that's what they do really well. But they're going to have to slow the purchasing down. So the next time in December, we're probably going to hear that they're going to start tapering. So they're probably going to drop it down to $40 or $60 billion a month that they're going to spend to buy mortgage-backed securities. What does that mean? Well, we have a high supply. We have a low supply and a high demand still, which isn't going to correct right away. So we're going to see a little bit of a correction as rates go up, because that's what's going to happen when they quit buying so much mortgage-backed securities. Okay, so rates will eventually start to go up a little bit. We're probably going to see that early next year. Maybe the end of this year, but I'm thinking early next year. A few issues with that. On the negative side, you have borrowers that already were having a hard time qualifying for a certain purchase price amount. Now, with the supply and demand issue, the prices are still going to go up, then rates are going to go up. So now these borrowers aren't going to qualify for the house that they were wanting to buy because the rate went up and the purchase price went up, which affects their debt ratio. So for borrowers, we're rolling into the holiday season, right? You agents need to send this out to your borrowers, whatever you want to do. But for you borrowers out there, while the rates are good, get the money while you can, buy the house while you can, because we're going to see some more inventory over the holidays. Or potentially we're going to see some of the prices level out so much over the holidays too, and you can probably get a good deal because the demand usually isn't as high. Okay, so you buyers really need to get off the horse. You need to get out there again and you need to get shopping. If you've already been pre-qualified, great. If you haven't, call me. If you were pre-qualified a long time ago, call me. Or even if you're pre-qualified now, call me. I'm going to get you a better deal than your current lender will. And for you agents out there, please reach out to me. I'm telling you, with what I can do as a branch manager, you're going to be amazed compared to probably your loan officer you're working with now, okay? But it's time to get off the fence. It's time to sell your homes. It's time to buy again while you can still get a good interest rate, because if you wait on selling your home to get more money, you're going to end up paying a higher rate later on. So you're going to negate all of that profit you made on your house by paying a higher rate over 30 years, which will probably cost you more money because that's compounded interest. And even Albert Einstein said that's the greatest invention, okay? So you guys got to start thinking now is the time. This is approaching the perfect time to either buy or sell and buy. You got to do it before rates go up. Have a good day.